Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend all. Ira Epstein of Linn Associates with your weekend edition of this financial market wrap-up. And this is for Friday, January 11th, 2019. It's about 3:20, which means we have the settlement prices in the stock indices. Most of the metals are in this range too. Yeah, the market will trade another 30 minutes, but barring anything, it won't matter. This will be the settlement prices. So we have a weekend, another one where we're about to set now a historic, 21 days of no government funding. The president so far not budging. Democrats not budging on what they're doing. And it's a mess, okay? We look dysfunctional to the whole world, and what can I tell you? Go another couple of weeks, and the damage to the economy will be more money than the border wall that the president, or the request for the funding that he's requested. Getting a little bit of a correction, as you can see, hitting in the energy sector. Nat gas getting a pop. Cold weather's coming through. I'm surprised it didn't even pop more than that today. And in the grain markets, very, very stable. So remember what we do in our weekend edition. The first thing that I do is I'm going to look at one monthly chart, and then after that the weekly charts to see what's going on. And this week we're going to have a few more Fibonacci charts on than I normally do because of where we're at in stock indices. The first thing of importance, the market came down hard, as you can see, and we've been having this bounce. Now the question is, can the market get back to the 18-month? That's the line here, the 18-month moving average of closes, and that's above the market at 26.85, about 100 points higher. Don't know if it'll be able to get there or not. When we take a look at a weekly area chart of closes, and this was a monthly area chart, now the weekly, you can see how the market came down, and you've got a good bounce going on, and this number is going to fall next week. It's right now around 27.12. It'll slip, and by about how much? I'm going to guess 14, 15 points, probably near 2,700 when it first opens on Sunday evening. When I go to the weekly bar chart and I move from the high that we made, remember that October high that we made, all the way down to the break low, you get what's called a Fibonacci bounce. Let me explain what that is on the Fibonacci. We call this a box from the bottom of the band, which is 38% retracement, to the 50% level. I boxed that right there. If the market can exceed that, maybe it gets into the next box area up to a 62% retracement. So far, we have a market that has been coming down. These are lower highs there, lower lows, and we're getting our first serious bounce in the market. When I step over to the swing lines on the chart, you can see where they're at with the low. You can see, and I left it on here, I just want you to see this all the way through, that the first big resistance is coming in at the 100-week average, and the support actually came in down here at the 200-week moving average of closes. So resistance area starting to fill in between the 100-week and the other part. Ideally, you hear something over the weekend. The word is ideal, that there's not going to be a government shutdown. Ideally, China trade's going to be good, blah, blah, blah. Still looking for that to be on a chart. It doesn't matter what the news is, you're looking for those resistance points. Has the market changed its overall trend? It has not. It is still a pattern of lower highs and lower lows. It is back over the lower Bollinger Bands. And remember, these dashed black lines represent an algorithm called Bollinger Bands. Go to Investopedia, great way to learn about them. But the way I teach them is the market will not stay out of those bands more than 5%. And depending on where you come out of the bands, tells you what the market is doing, and then you tie it to momentum. So what we have here is momentum has turned up in the chart. The market extended itself on the break into Christmas. We're getting a heck of a bounce. First resistance point comes in right here, 26.15. Second, around the 27.12 level, at least going home today. When I come to the NASDAQ, I go from the high point to the low point. You've cleared the 100-week moving average. So unlike the S&P, the next resistance point is a combination of the 18-day average right here and getting into that next box. You're already at the 38% plus retracement level. When I take a look at the Dow, you've cleared today, and that's why you had the resistance as you rallied back up last week, and you're still fighting with it at the green line, the 100-week moving average of closes. Now the 18-week, I did say day on the other, it's 18-week moving average comes in at 24.98. You're in this box of between a 38 and trying to get up to a 50% retracement. So from that break, this is the first serious bounce we're getting. Is it more than a bounce is where you're going to get the bulls and bears sharply deviate with each other. When we come to the Russell, again, the lower Bollinger Band held the market. I go from the high to the low. We're getting that bounce. You've got your 38% retracement, and similar to the other markets, coming into the differential of the 50 to 62%, you have that 100-week moving average and 18-week moving average of close. That's 18-week in that case. So what does it mean? In a nutshell, resistance above the market here, resistance coming in there, there, and there. All of them coming together close to the same points. When I come to the VIX, you went down to your neutral point. The 18-week moving average of closes often, you'll hear me say this over and over, is where a market, after it's gotten excessive, pulls back to decide what to do next. It's exactly what's occurred in this market. I have a pattern of a lower low and a higher high. I have a pattern where a market got very excessive in price, just the way it did back here, and now the volatility is coming out of the market. I recall, and I know I said it in one of my videos, I had seen one of my friends last week, and he was jumping up and down for all the volatility, and I told him he better get his feet on the ground. It's coming out of the market. He didn't want it to. I said it's going to, because what cures that, just like it did back here, too much volatility gets rid of the volatility, and that's what's going on. In the rally in the 10-year notes on a weekly chart, you went up to the combination while I was out of town here. Here we are. Here you are, and this is December 28th. So you go first to the upper Bollinger Band. That's your first resistance. If you clear that with the market in an uptrend, higher lows and higher highs, if the market doesn't break back, the next resistance, at least the one I have, is the 100-week moving average of closes. The market goes up to it the week of January 4th, and now it's reacting back down from that. No trend change. Market got ahead of itself, pulling back. That's all I can say. Could we be ready to see this market move to the downside in this momentum? Yes. Is there anything on the chart action right here by itself that turns the chart bearish other than momentum? No. And that's partly because you had this phenomenal run-up. You see this a little better in TLT. It's got a better looking chart to understand. If the market takes out 119.97, this pattern that we've had of higher lows and higher highs gets destroyed. It doesn't mean it turns bearish, but the idea that higher lows, higher highs will be broken hitting 119.98, yes. What about the resistance points? Well, here you are, same time frame, December 28th. First resistance, unlike the other chart, is the closer number, the 100-week average of closes. And if I come back here, that was flip-flopped. You had it the other way on the notes. Now, if you keep going, I look for the upper Bollinger Band. You got through it, excessive, and now you're pulling right back into that whole zone. So we have a market that has made a dramatic run-up. That run-up means real yields fell. Now the question is, what next for them? In the dollar index, I think the bears took control of this chart. On the weekly chart, I have a pattern of lower highs, lower lows. I would expect first support potentially to be the 100-week average, and if that gives ground, the lower Bollinger Band, and on rallies, the resistance up here to the 95.80 level, which is the 18-week average. But to negate this downtrend, you got to rally all the way through 96.85. I think this market has broken itself down. In the eurocurrency on the weekly charts, by the way, the daily charts don't look the same. The weekly charts look different on both of these. This market's in an uptrend. Higher lows, higher highs. Where would I expect the first resistance? The challenge of the 100-week average, 116.44, and this week you got to 116.32.5. Come on, you're right in that ballpark. Momentum up, bias up, trend up. You'd have to get through this 114.24 so to at least negate the uptrend. There's nothing on this chart because you got the higher high that can turn it immediately bearish, at least as a chartist. You're not in the bear camp in the British pound. You have a market that's got higher lows and higher highs. That's friendly. However, it's countered because you're under the 18-week average of closes. So the bias is down, the trend is up, and you've got momentum turning up. You have divergence. You can turn this chart bullish with a close over 129.12. Then you'd have the bias up. The risk would be rather substantial, back under 125.12. And furthermore, you know you're walking head on into a train wreck with the House of Commons vote that is scheduled to take place this week. And it looks as though, at least so far, that Miss May is not going to get passage of her idea of what the Brexit plan will be. And after that, the word chaos. Could she pull off a win? She could, but the bookies don't have it anywhere like that. When we get to the Canadian dollar, if you knew nothing else, here's a market that had been falling apart, running the lower Bollinger Band, getting back over and under it. Momentum's still down. If the market rallies, so often you hear me say, look for that 18-week average to be the first resistance point. This week, you ran up to it, you stalled. The market's out of the downtrend. It is not in an uptrend on the weekly charts. You ended a downtrend. In the Japanese yen, you soared in the yen off of all the fears 2 weeks ago. You remember that. You got up here to a crazy number, 94.58.5. Now you're pulling back. You're still over the upper Bollinger Band. I'm looking for that to get back under it. But the overall trend is what on the longer term chart? It's still bullish. And what was resistance, and I'll call this resistance right here, the combination of the 100-day average and the Bollinger Band. You come down the following week, you challenged it, and then you broke out with the news, and when everybody was panicking on stocks and so on, then it got calmed down with Mr. Powell and so many events taking place where the Fed was getting the markets back, blah, blah, blah. So here's the correction, but you're not in a downtrend. This market is still very much in an uptrend. In Bitcoin, I'm reading carefully what's going on, and you should pay attention to some of the articles. I think they were on CNBC, and it had to do with how many wallets have suddenly become active again that were dormant for the longest time. And you know, a wallet's where Bitcoins are held, and it's a big ratio that have suddenly come out. Whenever that occurs, according to the article, the market's getting ready for a move. Now, which way is the big question. At this point in time on the weekly chart, the market's got a pattern of lower highs and lower lows. Momentum is down and bias is down. It won't take much if you take out this last high of 42.65 to say that you've negated the downtrend. But I could also argue another way. I could argue that you have a pattern of a low and a higher low and lower high. So I can argue that the market's already coming in, and that's what I think's going on. Now the question is who grabs control. As we take a look at the spread of Brent versus WTI, the concept on a chart, be it a spread differential, price differential, I still say with where I'm at. The first challenge of the 18-week average is often a resistance point, and I think you see it right there. In this chart, the Brent itself had come down on the weekly charts, got excessive to the downside. I mean, I call that pretty excessive, a $35 break. And what had been in the past a resistance point is likely to be tested again. Doesn't mean it has to, but it's likely. If prices can clear that, where's the next resistance point? Back at the 18-week average. Who's in control going home? I see lower highs and lower lows. I see a market under the 18-week average. So I still see that as bearish, but. Notice how momentum has turned up. If we take a look here, momentum has now climbed back into the 20 area. Often, momentum leads price. So the momentum has turned up in this market. I'm going to say that this market now has got divergence in it. I feel the same thing in WTI crude. While the pattern is crystal clear, lower highs, lower lows, and we had a bear trend like that, I question if this market, if momentum turns up at all early in the week, aren't we saying that there's the possibility of price challenging this combination of prices? And no, I'm not in the bull camp, but I realize momentum on the downside has been lost. What about here? Haven't turned it yet in the gasoline. Gasoline still has lower highs, lower lows. Still nothing big there. Natural gas, where do you think it's grabbing right now and trying to find its support? I'll argue all day long. The 100-week average of closes, and if it can bounce from there, well, I would think then the 18-week could be the next resistance point. But again, lower highs, lower lows, not a turn in momentum. At any point, this type of market, the natural gas, all it needs is a weather storm and something big happens. Understand when you play natural gas at this time of the year, it is a Las Vegas game, in my opinion. It's wild. It becomes pretty crazy. You know, one of the most important things I do, I think at least, is put out my morning subscriber video. And no, you don't see it on YouTube or anywhere else. It only plays through my website. Why do I think it's important? Because at 8:30 in the morning, right when they open all the stocks for the stock market in the central time, the grains reopen and markets reopen, traders that had put on night positions, so on, the market readjusts itself and away you go. At that point, I start looking for the in and out trades during the day, the position trades, and I sit there and imagine sitting at my shoulder and I'm talking to you. I'm not in the camera the way I'm here. I just have my screen and I'm going through 40 charts throwing out ideas. Pretty interesting way if you wanted to see what I do and how to do it. How do you get all this? It's really simple. On the screen, you're going to see our phone number, 866-973-2077. You can also visit us at www.iraepstein.com. There'll be a carousel of free offers there, and you can click up here. It'll take you right there as well. In the meantime, I'm Ira Epstein. See you on Monday. Good luck, good trading. Have a great weekend.